Welcome to the condensed version of the daily video update, where I'll go over the action in the market for Friday, July 28th, and then we'll see how things look for Monday, July 31st. We had a bit of a rebound on Friday. It's helping our market turn back more positive. Unfortunately, we're starting to get to the point where we're looking overbought quite easily. Let's go back and talk about what happened. The Bank of Japan, they decided to conduct its yield curve control policy, giving them more flexibility that they're going to target 0.5% for their interest rates, but they're going to offer 10-year Japanese bonds at 1% every business day through a fixed rate purchase operations. When you watch the weekly videos and the daily videos, sometimes I refer to Japan and I say they're their own little story. That's kind of what I'm talking about here. Japan owns a lot of U.S. treasuries. If they have to sell those, that's going to push bond prices down, which may push interest rates up and also have an effect on the stock market. So that's what we're kind of keeping an eye on. When this happened on Friday, the yen weakened against the U.S. dollar index. Mega caps did outperform. We're seeing more broad participation in the market overall, but the big boys still had a good day. Earnings and economic reports were pretty much taken as positive. We're asking ourselves, will this positive scenario continue? That we'll have a soft landing, that the Fed is almost done raising interest rates, and that future earnings growth still looks positive. On a short-term basis, we're starting to see our list get a little longer now. The Williams percent R and the stochastics are extreme positive. In the intermediate term, we have the rate of change going back 50 periods, the PMO studies, the Sean trend meter, and the bullish percent index for both the S&P as well as the NASDAQ 100. All of those are extreme positive. On a long-term basis, the 150 and 200 period moving averages are coming down a bit, but they're still extreme positive. Now, you can take that two ways, that we're overbought and due for a pullback, or that we're just showing good momentum, because the market can stay overbought for an extended period of time, as we have been witnessing. The dollar was down overall, even though it was up against the yen, and interest rates were also down. The yield curves that we follow still remain inverted. Sentiment is still extreme at 78, where it had been at 77. Our trend is positive, but the green line is still coming down. The ADX is above its moving average, suggesting that we're in a trending environment, and that trend is getting stronger, and they're both above 20. However, they're also both to 40, suggesting that we might be extreme positive. Our bias is positive with the update, and I'm keeping our momentum at mixed to positive. The economic reports that came out, we had personal income up 0.3% on a month-over-month basis, lower than the 0.5% increase they had expected. Last time we did get that 0.5% increase. Personal spending was also up 0.5%, more than the 0.3% they had expected. Last time it was up 0.2%. The PCE price index was up 0.2% as expected. And the important one, which takes out food and energy, it was up 0.2% as expected. On a year-over-year basis, the PCE price index is up 3%. Last time we had this report, it had a year-over-year basis of 3.8%. And the core, which is the more important one for inflation, it's now at 4.1%, where a month ago it was showing an annual rate of 4.6%. The second quarter employment cost index came out up 1%. They expected it to be up 1.1%. Last time it was up 1.2%. And consumer sentiment came in at 71.6, a little bit lower than the 72.6 that we got in the preliminary reading. And last time we had the report, it was at 64.4. If you go back a year ago, it was at 51.5. So we are seeing some improvement. Here's the intraday chart. We really gapped higher. We went all the way up to R1 and we stalled out just about at that level before coming back down. It was looking like, oh boy, Friday's going to look just like Thursday looked, but we ended up finding some support, bouncing back up, made it almost back up to R1, a little bit of weakness, and then some buying going into the close. The growth to value ratio for the S&P was above the unchanged level, so this is showing improvement. Looking at our trend, we're above 40 with the ADX. We're above the moving average, but the green line continues to decline. However, we would still default to the positive. And our short-term ADX is also above 40, above the moving average with the green line declining. On the daily chart, we got to the underside of this upward sloping trend line and then came back down slightly from there. We're wondering, are we going to be able to break through that? We also have some previous resistance to try to handle. If we start to fall, will this pivot level hold? And then on the bottom, you can see where we dropped to below average. Looking at the Dow, it was up again on Friday, so were the transports, and the utilities were down. All of this together helped give some support to the S&P. When we look at the transports to S&P 500 ratio, it is starting to tick back up, and overall it is increasing, and this would also be healthy for the overall market. With the NASDAQ, we're still keeping an eye on the 61.8% retracement level. We had an up day, so we're getting a little further away from that. Looking at the NASDAQ 100, we're still above the August 2022 highs. We were also able to get above this pivot point. Can we continue to go higher, or are we going to start to decline? If we do fall, will the August 2022 highs hold as support? Again, looking at the NASDAQ 100, this is more negative. We're seeing a negative divergence with the PPO, which is a momentum oscillator, where we were making a higher high based on price, but a lower high with the PPO. Now, some of that is based on how it's calculated, but now we continue to be more negative with the PPO. So that's one thing to be aware of. Looking at the weekly chart of the S&P 500, we're still above this longer-term resistance level. So far, that is holding. We can say the same thing for the NASDAQ 100. It's above this resistance level. When we take the ratio between the NASDAQ 100 and the Dow on a weekly chart, we're still looking at a pretty extreme reading. We could still go higher than this, but if we really start to fall and come down hard, that could be pretty negative for the market. We will be on the 20th trading day of the month, which is also the last day where we tend to see some weakness. Also, we're keeping an eye open for that for the NASDAQ, where we also see weakness on the last day of July. Looking at August, we tend to see some weakness going into the beginning part of August. Then we see a little bit of a recovery. Typically, we could see some strength coming into the end of August, historically. When we look at pre-election years going back to 1950, we're 50-50, being up and down for the S&P. So our scenarios, we can't go with the down one now because our technicals are positive, even though we are becoming more overbought. If we default to anything, it would be to the uptrend because our technicals are really positive. But be aware, we're becoming overbought. We can't go with the sideways trend now because the ADX is really strong and suggesting we're in a trending environment. The warning signs, we're still wondering if there's this convergence of these short-term bearish signals coming together. They kind of come and go day in and day out. We'll have to see if they all come together and produce a significant decline. Longer-term trend signals may be signaling a top. They're not yet. We're above those levels on the weekly chart, both for the S&P and the NASDAQ 100. But if we start to fall down below that, we'll be watching. Seasonally and historically, we're coming into a weak time of the month. That's the last day of July and the first part of August. The oscillators are turning negative with the ones that we usually look at, and we're keeping an eye on the NASDAQ 100 oscillator. The VIX is still showing that there's not a lot of fear in the market. The cumulative new highs, new lows for the NASDAQ continue to show weakness. The 3-month yield is still above where it was back in 2007, and in fact, it's continuing to go up. The S&P 500 growth is weakening, but it's still in an uptrend. And then we're dealing with earnings season on a stock-by-stock basis. The positive signs, we have seasonality and setups that remain in the background, and I go through those in the weekly video. The special K for the daily chart is still positive. The weekly chart is negative, but looking better. The long-term equity put-call ratio is positive. The S&P remains above the downtrend channel upper line. We're still in a risk-on posture. We got some of that back on Thursday and Friday where we took a hit earlier in the week. Lower price levels so far have been providing support. If we start to see a real decline, we'll see if those levels hold. The S&P is outperforming utilities. The NASDAQ and NASDAQ 100, they're still breaking above overhead resistance on the weekly chart, but they haven't broke through the pivot points on the daily charts. The staples to S&P 500 ratio is declining. The Russell 2000 as well as the small cap index in addition to the mid caps have generated recent golden crosses. Small and mid cap growth continues to be positive. The Copic curve, it's still generating a buy signal, but it is in danger of going away, where the Pring bottom fisher has generated a buy signal. The conclusion, the S&P remains positive, and if we continue to go up, we're just going to become more overbought. We can say that for the short term as well as the intermediate term, and we're still positive in the long term, unless you're worried about the 150 and 200-day moving averages, but they are declining now. Thank you. I hope you found this helpful. Please feel free to check out the full-length video. Have a great weekend, and I will talk to you in the next video.